Good evening and welcome to Money Matters TV. I'm Patricia Dunn of the Dunn Group at Merrill Lynch in West Conshohocken, and with me tonight as my co-host is Charlie Shields from Wells Fargo, First Vice President and Portfolio Manager. Welcome.
Good to see you again.
Good to see you. There's been an awful lot of press lately, and I'm sure our visitors are very anxious to hear your take on the new Department of Labor laws that will affect retirement accounts. Do you want to share?
Okay, yeah, it's kind of interesting. The Department of Labor and the SEC are two different organizations, and the Department of Labor can only get involved on the pension side. Mm-hmm. They don't have any access to influence what's being done on taxable accounts. So these rules that they're coming out with only apply to the tax deferred accounts, pension plans, IRAs, and they're saying that you've got to treat clients, every move you make should be for the best interest of the client and not for the best interest of a financial advisor. And I submit to you that if you're not finding that your financial advisor has your best interest at heart in your other accounts also, you ought to go somewhere else. But having said that, the rules are going to be that they can look and make sure that each investment was done with the best interests of the clients at heart. And maybe one of the examples we could use is the difference between A shares and C shares. An A share, the bad news is that there's a front-end load. If you're putting $10,000 in, there might be a 5.75% front-end charge. But over 10 years, because the annual expense ratio is lower than C shares, the A share would be a better investment. A C share, you get to put 100 cents on the dollar to work, but over 10 years, because it has a much higher annual expense ratio, you would be paying your broker much more money to be in that C share for 10 years. So I don't know if the rules are going to say if you're going to buy a C share for a broker, it better only be for 2 or 3 years because the cost would be better there, or what they're going to say. But it goes back to the old rule. If you do what's best for the client, nobody can get mad at you.
Exactly. And if you don't feel that you are getting the best from your advisor, it's time to find a new advisor.
Yes, indeed.
Well, now, from a practical standpoint, would a managed account do better than a brokerage account? Does that solve the problem?
Well, managed accounts come in various shapes and sizes. So if you're being charged a reasonable fee in a managed account, that is probably a good way to go for most people. Now, if someone likes to buy a stock and leave it sit there for 15 years and only buy the best blue chip stocks and very rarely sell, then a managed account wouldn't be suitable for them. If the turnover happens to be like, let's say, 25%, where you're buying and selling things every 4 years, which is prudent people do that, then a fee-based account is appropriate. Now, 10 years ago, fees could be as high as 3%, which was ridiculous in my opinion, but that's what happened. Now fees are down closer to 1% or 1.5%. So in many cases, a fee-based account would fall under the guidelines of Department of Labor, but it depends.
Mm-hmm. And of course, the Department of Labor, it's not going to stop there. The FINRA and the SEC are going to harmonize with the Department of Labor, so the same rules will someday probably apply to regular accounts as well, not just retirement
let's hope
accounts.
So.
Yes. Yes, it's better for the client that it's across the board. Well, let's dive a little deeper on these managed accounts. There are managed accounts where you have multiple managers working within the same account number, and then you have a single manager working within an account number. What are your thoughts on those?
Well, if you have a diversified managed account, as we call it at Wells Fargo Advisors, where you have 3 different managers, then the costs should be adjusted to reflect if one of those managers manages bonds, where the fee should be smaller, and 2 of those managers manage stocks, where the fee should be higher. It should be a hybrid charge in those accounts. If some people say, well, I want to have this one particular manager and the rest of it, I want to do it with just a general account where I'm paying commissions on occasion, and that one manager happens to be a stock manager, then that fee would be charged just in the case of that one manager. And so I think there are reasons to have SMAs and DMAs. For example, you'll see times when people panic in mutual funds, and a mutual fund manager is saying, oh good, now the selling is over, it's time to buy. And people tend to panic right at the bottom. So here he's ready to buy all these great stocks he owns in the mutual fund, and here comes a wave of selling orders where he's forced to sell. If you own a diversified managed account or a separately managed account, you own the stocks and you don't get caught up in other people's panic. Now that doesn't happen too often, but it's something to think about.
It very definitely, and it will impact performance, and I've seen it impact performance. Well, let's switch gears a little bit. Oftentimes investors will ask me, Pat, what is a unit investment trust? So I'm going to ask you, would you explain it, and are they of value?
Okay, in layman's terms, unit investment trusts are a package product that's really not managed. The investments are selected at the start, and then they're pretty much left alone for some period of time, like a year or 18 months or 2 years. And perhaps you say, well, I want to own some energy stocks, and a unit investment trust would have a package of different energy stocks, and you're going to go into that for a period of perhaps 2 years, and then that money is going to be spit out and you can decide what to do with the proceeds. Now obviously if you're buying an energy unit investment trust and oil has run up from $25 to $150, that might not be a good time to buy a package of those things. If oil has come down from 150 to 50, it might seem like a good time. It might turn out that oil goes down another $25. But unit investment trusts are a way to package up an investment, especially if your financial advisor doesn't have the expertise. Maybe it's in emerging markets or emerging market debt or small cap stocks or what have you. It's got an advantage over a mutual fund that specializes in something like that, in that you'll only be in it for a year and a half or 2 years, and if you're buying it at a time you think those particular stocks are cheap, then you're not getting all tangled up with front-end loads or high annual expense ratios. You're paying a fixed amount of money, and then you have the ability to roll that over, if you want to, into any type of UIT when it matures.
So in effect, it's like an exchange-traded fund with a maturity.
That's probably a fair way to evaluate it.
All right. One other question. What are your thoughts now about annuities?
Well, annuities are getting cheaper. There are times that it's probably appropriate for an individual investor to think about an annuity, and there's a lot of research and a lot of conversation with your financial advisor before you do that. But in general, if someone is totally afraid of the stock market and the stock market's gotten very cheap, a way they could get into the stock market and still have some protection, think of it as belt and suspenders, is if they get into a variable annuity where they have the alternative to buy the stocks, but they can pay extra costs and have a guarantee of a certain percent of climb in that account, a living benefit, no matter what happens. Now, the expenses are high in many cases. They should be very careful about investing in that, but that's generally the idea about one type of annuity. Do you have any thoughts on annuities yourself, Pat?
I actually like annuities, particularly the ones with the living benefits, because for many clients today, there is no such thing as a pension anymore. And by buying an annuity, adding to it, building up that annuity, that's a pension ready to go when they're ready to retire. It'll provide a paycheck every month with benefits too for the heirs afterwards.
So, for example, if it has a guarantee of a 6% simple interest each year, that for 7 years or 10 years, at the end of that time, if they put $100,000 into it, it might be $160,000 or $170,000, and then they can start taking the payments in some cases for the rest of their lives, and they don't have to annuitize, correct?
Correct. And I do it in even bigger numbers, because if you can build this annuity up to $1 million, then you're looking at a $50,000 a year income for the rest of your life. And sometimes, not so popular anymore, but sometimes you can get them on both yours and your spouse's life.
Okay, and I did use the term annuitized. Do you want to explain to our viewers and listeners what that means? I don't think it's a good thing to do in most cases.
No, and in the case I just described, that is not annuitized. You're taking a living benefit off of it. The way I describe annuitized is you think of an annuity as a box, and you put your money in the box, and the box grows with the market. And in some cases can shrink with the market depending upon the protections that are wrapped around it. But come the day that you want to retire, if your only option is to annuitize, think of it as having a spigot on the end of the box. And you're turning the spigot on, and out is coming a flow of both principal and interest, and the box is shrinking. And the return on the box shrinking is typically 1 to 1.25% per year.
Yeah.
And the market could be going up 6 to 8%. So I do not like annuitized products.
Right. If they annuitize the investment, then it belongs to the insurance company, and if they're hit by a truck the next day, they spent all this time building up value that's no longer theirs. Now, you can make it second to die and all that sort of thing, and I don't want to get into too much of this, but I want to beg our viewers and listeners, talk with your own advisor. These are very complex products, and
Yes.
we're just trying to make them generally aware, but we certainly don't want anybody making a decision based on what we talked about today.
Absolutely. Now, do you have time for a question from one of our
Sure.
viewers? Well, our question tonight comes from Robert Gates of Newtown Square, and he says, the oil industry is moving along, which it is. Is this a good time to invest in oil stocks?
Well, I wonder if Robert is a relative of our former Secretary of Defense. But at any rate, we'll get into the question. The answer is maybe, and oil has been between roughly $25 and $150 over the last couple of years, and we don't want anybody timing a decision based on this show because it's aired at different times in different places. But when I see oil somewhere below $50 and it's been at 150 and it's been at 25, my instinct would be to dollar cost average into oil investments. I would not take $300,000 and put it into energy stocks all at once right now. I would be feeding in whatever increments someone wants to purchase over the next year or so, because we don't know where energy is going to go. Some people are afraid we'll go into a recession. Some people think that oil belongs at $70 and it'll work its way back up there. And I don't know where oil is going to be over the next year. But you can get some good dividends from oil stocks. You can get some good dividends from pipeline stocks that pass the oil down a pipeline. But I would be dollar cost averaging if I wanted to buy some energy stocks right now.
And I would agree, and it's definitely something you don't want to do on your own. It's something you want to talk to your advisor about, because as Charlie mentioned, these shows are shown at different times, and it may not be relevant at the time you hear this show. So if you have questions that you'd like to send into Money Matters, we're going to show you how to do that.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back to Money Matters. Now in the program, we turn to our guest, and tonight's guest is Paul Marano, P.E., otherwise known as a professional engineer, one of the founding principals of Advanced Geoservices, and today serves as one of their leading consultants, project consultants.
Yes.
Welcome, Paul.
Well, thank you. Thank you for the invitation.
You know, I'm very curious, and I have to ask you this. How did you come to this career? What inspired you to become a A
Geotechnical engineer?
geotechnical engineer.
Well, as with most engineers, I'm a little bit of a math and science nerd. I like the idea of civil engineering and, building the civilization. Within civil engineering, there are a number of branches. And geotechnical engineering kind of appealed to me because it's not as cut and dried. I mean, you have to take a look at a particular site and, by doing some testing, kind of put the clues together, almost like a detective, to determine exactly what's going on beneath the surface, and then applying that and engineering principles to come up with answers. So there's still a lot of art to the science. It allows me to not only take the technical end of it, but also a little bit more of the creative end, because normally there's several ways that you can handle a situation, and the creative challenge is trying to find which way is the most appropriate and the most cost effective.
So let's suppose that one of our viewers or listeners came to you tomorrow and said, I've got a project I want to do, and I'm not an engineer, but I have this idea. How would you help them with the development of the property?
Well, our focus is more on how to develop the site.
Mm-hmm.
Assuming that whoever is purchasing the site has gone through their market analysis and know exactly what they want to do with it, then what we would do is take a look at that site, determine what kind of regulations you have to meet for that particular municipality in terms of the site design. We would also then look at what has to be done from a geotechnical standpoint to actually do the construction you want to do.
So you would keep them out of trouble about whatever rules they might not know about, but you're mainly into the implementation once they've decided the project's a go.
Right. Our civil site design people would work hand in hand with him for the development through the municipal approval process, obtaining all the permits and meeting all the rules and regulations that are required. As a geotechnical engineer, what I would do is to take a look at what it is they want to build, what level of the site they want to build it at, and determine what they have to do to make that work.
Okay.
Well, let's expand that. What kind of issues could impact development?
Well, speaking strictly from the geotechnical standpoint, it's really kind of unique in that not only are the site conditions relevant to what you want to do, but what you want to do with the site is relevant to it. You can have a site that is perfectly suitable for one type of development, but completely unsuitable for another type of development. It really comes down to the particular project details. For example, if you have a site where you want to do very deep excavations and you have shallow rock, well, that's an issue because removing rock is 5 times more costly or higher than removing soil and takes more time. If you want to put basements in and you have a shallow groundwater level, well, now you have to look at putting waterproofing in all the basements. If you want to build a very heavy structure like a high-rise or industrial facility, you may be looking at the weight of that might compress some of the underlying soils and cause settlement. And depending on the thickness and the soil type of that underlying layer, those settlements can be excessive and they can actually go on for several years.
Let's step back for a minute because this is pretty technical stuff to the average viewer or listener. Just talk to us about kind of a definition of geotechnical engineering. What do you guys do, and what kind of training do you need to do it?
Geotechnical engineering is a branch of civil engineering. It addresses how soils can be used as an engineering material. One of the things that we evaluate is how the soil, rock, and groundwater conditions at a given site will impact the construction that you want to do with that site. It's unlike a structural engineer who can sit there and design a structure and dictate exactly what size and strength of a particular steel beam he needs. Mm-hmm. The geotechnical engineer has to work with whatever the site is giving him. And so it's a matter of investigating the site, trying to determine what those subsurface conditions are and how they're going to impact the construction. And if the site is inadequate for what you want to do, we have to come up with measures to either improve the conditions or overcome those inadequacies.
Do you also help clients worry about whether there's going to be remediation required if there's problems with the soil from a previous owner, or is that another engineer?
Well, that's more of an environmental type issue, but in our firm we do a little bit of everything. I've done some environmental projects as well, so I would be able to help them with that situation.
Then why don't you tell us a little bit about your firm? Because clearly the builder is not going to stop with the architect. He's going to need somebody like you. So tell us about your firm.
Well, Advanced Geoservices is a consulting engineering firm. We do environmental, civil site design, land planning, and geotechnical engineering services. Our clients are architects, structural engineers, commercial and industrial clients, residential developers, institutions, and municipalities. We've actually just celebrated our 24th anniversary this past week, and our main office is in Westchester, Pennsylvania. We have branch offices in Lancaster, Pennsylvania, Cherry Hill, New Jersey, and in Fair Lawn, New Jersey as well. Most of our environmental work spans the entire country. Projects are all over at every location. The geotechnical and the civil site design work is more regionally focused, and most of our work comes in Southeast Pennsylvania, New Jersey, and Delaware.
Could you take our viewers and listeners through a typical project? Suppose they came to you and said, all right, I don't know anything about this stuff. I'm getting ready to put this building in. Just take us through the process, if you would, how long it might take to get something completed.
Well, again, I'm just going to speak strictly about the geotechnical end of it, because the civil site design end and the approval process in a municipality can take years. But from a geotechnical standpoint, if someone comes to me and says, this is my site, here's what I'm thinking of doing here, what I would do is, the first thing I would do is start to investigate the site itself. Look at the site history. What's happened there before? What could possibly impact what you want to do now? For example, if the site had been used as a dump, and you have all kinds of debris and everything else there, well, that's certainly going to be an issue for you. Once you take a look at the site history, then you put together an exploration program of where you're going to go on site, what kind of testing you're going to do to get an idea of subsurface conditions. You would do that testing, and there's a number of different investigative methods you can use. Some are more appropriate than others for given circumstances, and it's best to maybe use a combination of those methods, for a particular site. But once you do the field exploration and a little bit of associated laboratory testing of the soils, then you kind of put all that information together to try and develop a cross-section of the subsurface conditions at the site. And what that cross-section does is that it helps you identify either areas of the site, excuse me, or maybe particular soil layers that might be problematic. All right. Then what you would do at the next point is to take all that information and start doing analyses to see just how those soil conditions would be expected to behave under the loads and stresses of this new development. And you would then you would determine whether the conditions were adequate or not. And if they weren't, then what you would have to do is come up with measures to improve the conditions, again, so that they can build what they want to build.
And sometimes you'll hear horror stories like ancient burial ground or whatever that you stumble across in putting some project to work. So, and time can be a lot of money for a client. So maybe it's smart for them to hire you early on before they really make their purchase.
Oh, there's what's usually known as a due diligence period when you're going to purchase a property. It's typically 90 days, but it really depends on your particular agreement. And during that time, you certainly want to do an environmental investigation of the site. You want to see if there are problems. Because if you don't do that, what's called your environmental due diligence, and you purchase the property, you're on the hook for any cleanup that comes up later. If you do the due diligence, then there is what's called an innocent landowner defense, where you can show, hey, I tried to study it, I tried to find out what I could, I didn't find anything out at the time, I'm in the clear. From a geotechnical standpoint, it's sometimes beneficial to do that as well, especially if you're looking at doing something radical with the site. If you're looking at doing a lot of deep excavation or bringing in a lot of new fill, if you're looking at putting up very substantial structures that are going to put a lot of pressure on the ground, sometimes it's good to do some of that work up front to give you an idea of what it's going to cost you to develop the site. You may determine from that that the price just isn't worth it.
Okay.
Now, I don't get the impression that your work is done before the first shovel hits the ground. Does your company then offer any kind of construction services or during construction services?
Yes, we do. And typically they would be testing and inspection services that are related to the earthworks. Usually when you put in a fill, you have to do it in a controlled manner so that it is stable and strong enough to support whatever structure you put on top of it. We would do that kind of inspection to make sure that it was constructed properly. We would inspect the foundations as they're being installed to make sure that they're done properly, that they're bearing on material that's capable of handling the loads we said they could. And also like the preparation of a subgrade before you put your paving on to make sure that your paving's not going to break up 2 months after you put it in. The other important thing to remember about the construction services is that when you're doing the investigation, you can only do a limited number of locations. You can only test at certain locations. And so there's a certain amount of interpretation that has to be done between those locations because soils will vary. Now, of course, you do enough to make yourself feel comfortable with the design assumptions you make, but they are design assumptions. And the advantage of doing the testing and inspection during construction is that it lets you see the site when it's more exposed and more open, and you get a better idea of what's going on all over the site. That can help you either confirm the original design assumptions, or what it can do if you find change conditions is it gives you an opportunity to provide alternate recommendations for those change conditions.
Do you or your firm help clients with the non-technical stuff like the cash flow to make sure that they don't get one halfway through and realize that they didn't set aside enough money and they're going to go out of their project won't be able to be completed, that sort of thing?
No, we don't get involved in that portion of it, although a good geotechnical engineer has to be aware of those kind of things because sometimes they can impact your technical recommendations.
Yeah, sure.
For example, I've been on projects where there's a drop-dead deadline for completion of the structure.
Yeah.
For example, if you're doing a new school, it has to be done by September 1st.
Right.
Okay. In cases like that, sometimes, although we might recommend what we think is the most economical foundation system, they may choose to go with something a little more expensive if they can be assured that it can go in quicker.
I understand. This has been fascinating. Tune in next week for our special guest, Michael McCurdy of Jones Lang LaSalle, a very large international real estate company. It'll be very interesting. And as always, your money matters.